Every time I bought a new car, the finance person at the dealership reports my income as higher than it is to help get the loan approved. That's not just one person's experience. On October 22nd, 2025, Primer Lend Capital Partners filed for bankruptcy. $500 million gone. September 10th, Tricolor Holdings collapsed. 65 dealerships, $9.5 billion in fraud. Two major auto lenders dead in 6 weeks. So I pulled the Federal Reserve data, the bankruptcy filings, and the fraud reports to see if this was isolated or systemic. What I found is a $1.66 trillion market that's built on fraud, with subprime delinquencies at the highest level ever recorded, higher than 2008, and America's biggest banks launching predatory loan programs while the smart money runs for the exits. In this video, I'll be breaking down the fraud machine destroying the market, the loan program from a major US bank that's pure insanity, and why this doesn't end until 2028. Now, when Primer Lend's bankruptcy trustee opened their books, what they found wasn't just a failed lender, it was evidence of something far worse. Primer Lend Capital Partners was a Texas-based firm that specialized in financing. Buy here, pay here dealerships. The places that sell cars to people with terrible credit or no credit at all. Their motto literally on their website was, "We say yes when others say no." And they positioned themselves at the absolute riskiest edge of the subprime market. However, on October 22nd, 2025, that strategy collapsed. They filed Chapter 11 bankruptcy, listing assets and liabilities between $100 million and $500 million. In their court filing, they blamed what they call the subprime cycle: higher interest rates, volatile used car prices, market pressures. But you see, that term, subprime cycle, is doing a lot of work here, because what's actually happening isn't a cycle, it's a crisis. You see, the Federal Reserve just released data showing that the subprime auto loans that are 60 days or more past due hit 6.56% in January 2025. That's not just high, that's an all-time record. It's higher than any point during the 2008 Great Recession. It's higher than any point since they started tracking this data in 1994. So why are delinquencies exploding? Well, everyone thinks it's interest rates. People can't afford the higher monthly costs. But I dug deeper and I found something different. You see, it's not what people are paying in interest. It's what they are paying, period. The average auto loan amount for subprime borrowers has jumped 26% since 2020. Cars got expensive. People had to borrow way more than they should have, and now they simply cannot make the payments. Average new car payments right now in America are $749 a month. Used car payments are $529, and nearly 20% of all car buyers are paying over $1,000 every single month. But here's what makes this different from a normal economic downturn. You see, in a normal market, lenders at least try to verify information on loan applications. They check income, they verify employment. But now, $9.2 billion in auto lending fraud has been recorded in 2025 alone. And 69% of that fraud is classified as first-party fraud. That's not identity theft, by the way. That's borrowers and dealers working together, deliberately lying about income to get loans approved. Which brings us back to that Reddit quote at the beginning of this video. This isn't one sketchy dealer in Miami. This is systemic. There's talk of dealers admitting that they approve people they know can't afford the payments because they need to move their inventory pronto, and they deal with the repossessions later. That's not a bug in the system. That's their business model. So you've got record delinquencies, you've got system fraud at the dealership level, and you've got subprime lenders that are collapsing. But what about the big banks, the mainstream financial system? That's where this gets truly insane. You see, while Primer Lend and Tricolor were collapsing, one of America's largest banks was launching something that should terrify anyone who remembers 2008. In September 30th, 2025, Wells Fargo rolled out a pilot program that allowed borrowers with credit scores as low as 540 to get auto loans up to 150% loan to value. Let me break down what that means. Someone with a credit score of 540, which by the way is deep subprime, significant damage credit, can walk into a dealership and get approved for a $30,000 loan on a car that's worth only $20,000. They are underwater by 10 grand the second that they drive out of the dealership. And that extra $10,000, well, it's not free money. It gets used to cover, negative equity from their previous car that they are trading in, or it goes towards, overpriced dealer add-ons like extended warranties, or it just pads the dealer's profit margin. So when Wells Fargo was asked about this program, a spokesperson said, "We are continuously testing potential lending solutions in the market." Guys, that's corporate speak for, yes, we are doing this, and if it works, we are going to scale it. This is the exact same predatory lending that caused the housing crisis. The only difference here is that it's cars instead of houses. But here's the strange part. While Wells Fargo is launching these programs, other major banks are running in the opposite direction. Key Bank completely exited, indirect auto lending. Citizens Bank exited. Bank of Montreal exited after their credit loss provision surged 800% in their retail lending division. So you have some banks fleeing the market entirely, while others are pushing loan products with terms so aggressive they are designed to fail. What does that tell you? They know the defaults are coming. Here's who gets destroyed first. Generation Z, 7.5% delinquency rate. These are people who bought cars during the pandemic when every dealer was handing out loans like candy. They are now facing $750 plus monthly payments on cars that are worthless than what they actually owe. 31% of all American drivers with a car loan are underwater right now, meaning that they owe more than the car is worth. That number increases to 39% for vehicles purchased since 2022. And here's the trap. You bought a car in 2022 for $48,000. Today it's worth $32,000. You still owe $41,000. You are 9 grand underwater and you're completely stuck. You can't sell the car without writing a check for the difference. You can't trade it in without rolling that debt into your next loan, which makes the problem even worse. You're trapped. And if you think loan sizes, delinquencies, and predatory banks are bad enough, well, there's a third layer to this crisis that's making everything exponentially worse. In October of 2025, the average price for a new car in America broke $50,000 for the first time in history. But the market split. You have wealthy buyers that are purchasing $65,000 Ford F-150s like nothing has changed. Meanwhile, the bottom of the market has completely collapsed. That's sub $20,000 new car. They barely exist anymore. The cheapest new car you can buy in America right now is a Nissan Versa at just under 20 grand. Poor and middle class buyers have been completely priced out of the car market. And if you manage to scrape together enough to buy a used car, your insurance is about to crush you. Auto insurance rates are up 30% over the past 3 years. Some states are seeing, 25% increases in a single year. Florida is up 23%, Colorado and North Carolina, both about 25%. And then there's the Kia and Hyundai disaster. You see, Kia and Hyundai built millions of cars between 2011 and 2022 without engine immobilizers. It's basically an anti-theft device that 96% of other manufacturers included in their cars are standard. Just a $150 part that prevents the engine from starting without having the correct key. They skipped it to save money. In 2022, a viral TikTok trend called the Kia Challenge showed millions of people how to steal these cars in under 30 seconds using nothing but a USB cable. Break the window, pop off the steering column, plug in the USB, turn it like a key. Gone. Let's meet Sarah from Milwaukee, Wisconsin. In May 2022, she bought a used 2019 Kia Forte for $18,500. It had a clean title, one owner, decent mileage. She put $3,000 down and financed the rest at 7.2% interest. So her monthly payment was about $380 to $400 a month. 3 months later, the TikTok videos went viral. And within 2 weeks, her car was stolen twice, each time recovered by the police. Her insurance company, Progressive, paid both claims. And then in December 2022, they sent her a letter. We will not be renewing your policy. She called State Farm, declined. Allstate declined. Geico quoted her $850 a month, more than double her car payment, because her vehicle was now classified as extreme theft risk. So Sarah is stuck. She can't drive without insurance, and she can't afford $850 a month. And here's the real trap. She still owes $14,200 on the car, but it's now worth maybe $9,000 on the open market because every Kia and Hyundai from that era has absolutely tanked in value. She's $5,200 underwater on a car that she literally cannot insure with a major carrier. She can't sell it without writing a check she doesn't have. She can't trade it in without rolling that debt into another loan, making her even more underwater. And she can't just stop paying because, well, that destroys her credit and she still gets sued for the, deficiency balance. Sarah is one of hundreds of thousands of Kia and Hyundai owners that face this exact trap right now. These Kia and Hyundai models they now represent over 60% of all vehicle thefts in cities like Milwaukee and Cleveland, Ohio. And so, between the predatory loans, the systemic fraud, the insurance apocalypse, and the price explosion, you'd think things couldn't get worse. Well, right now, hundreds of thousands of damaged vehicles are being laundered into the market using a billion-dollar fraud scheme that makes it completely invisible. Right now, 347,000 flood damaged vehicles from the 2024 hurricane season are entering the market with clean titles. Hurricane Milton destroyed 120,000 cars in Florida. Hurricane Helen took out about 140,000 cars across multiple states. These cars are supposed to be totaled by insurance companies and either scrapped or sold with flood or salvage brands on the title. Instead, they're being laundered. It's called title washing. Someone takes a flood damaged car from Florida, where the branding is strict, and transports it to a state with weaker regulations. They apply for a new title in that state, and the flood brand doesn't transfer. The title comes back clean. 6 states provide data to the national title system, but don't actually check it before issuing new titles. These cars look perfect on the surface. They are professionally detailed, good photos, sitting on a reputable dealership lot, but they are rotten from the inside. Corroded wiring, ruined electronics, mold growing in the ventilation system. They are ticking time bombs, and you have no way to know until the electrical system fails you in 6 months after you bought it. Okay, so you can avoid the flawed cars. You check every vehicle history report. You inspect everything. But here's what you can see. 2.1 million vehicles on American roads right now have illegally rolled back odometers. And here's the irony. Digital odometers are actually easier to tamper with than the old mechanical ones. Fraudsters just plug a device into the car's diagnostic port and reprogram the mileage in minutes. It takes less time than an oil change. That one owner 45,000 mile Honda Accord that you are looking at, it might have 145,000 miles. And the average buyer has absolutely no way to detect it. Vehicle history reports won't catch it. Carfax and AutoCheck only show what gets reported. If the odometer was rolled back between service visits, it's invisible. Now, if you're thinking, okay, but when does this get better? Well, the answer, according to every major automotive analyst, is about 2028 at the earliest. 3 more years of this chaos minimum. And if you're buying a car before then, here's the one thing that will save you: information. Credit unions over banks, because rates are typically 1 to 2 points lower. Pull both Carfax and AutoCheck, not just one. They use different databases. Check for flood damage yourself. Pull up the carpet, look for water lines, smell for mildew. And please try not to accept a loan that is over 100% loan to value. Right now, across the country, people are walking into dealership lots with no idea any of this is happening. They are sitting across from finance managers who are inflating their income on loan applications. They are signing for 150% loan to value deals that make them underwater before they leave the dealership. They are buying flood-damaged cars from hurricanes 1,000 miles away. They're taking 84-month loans on cars that will be worthless before they finish paying. They don't know about the fraud, but you do. The market is broken. The risks are unprecedented, but they're not unavoidable for people who actually know what's happening. So please share this with anyone that's planning to buy a car in the next 3 years. It could save them from a $30,000 mistake or 7 years strapped to a debt spiral that they can't escape. Please hit the like button if you enjoyed any of this, and do subscribe for more content like this. Bye-bye.